Hello all. Today we are going to discuss about the characteristics and methods of depreciation. Um, Actually, it is an evident that depreciation is the permanent and continuous decrease in the value of an asset from any cause. It differs from fluctuation, which is a temporary increase or decrease in value. When a fixed asset is acquired for use in the business, its working capacity or its earning is gradually reduced. It is a fall in the value of the fixed asset. Depreciation may be defined as a measure of the exhaustion of the effective life of an asset from any cause during a given period. Depreciation may be defined as a gradual deterioration in the value of an asset according to Williams. Um, Characteristics of depreciation. A careful examination of various definitions of depreciation reveals its original characteristics. Depreciation is calculated on the value of the depreciable assets like building, plant, machinery, furniture, loose tools, etc. It is a permanent and continuous decrease in the value of an asset. Depreciation is caused due to use, effects of time, obsolescence, etc. Depreciation is charged to the spread the cost of an asset over its usefulness. Um, there are methods of depreciation. The straight line method of depreciation is the most simple and easy to use depreciation method. It is the common. It is the most commonly used method, um, and it is easy to use depreciation method. It is the most commonly used method of depreciation. It is also called the original cost method, fixed installment method, or equal installment method. Under this method, the depreciation calculation is done by reducing the residual value from the cost of the asset, and then the amount is divided by the number of years the asset was used for or for its useful life. The same amount of depreciation is charged every year on the original cost of the asset. The same amount of depreciation is charged every year on the original cost of the asset. The amount of depreciation is charged every year on the original cost of the asset. The amount of depreciation is charged to the profit and loss account every year. For better understanding, we have a straight line depreciation formula, amount of depreciation, and rate of depreciation. Next is written down value method. It is also called as diminishing value method or reducing balance method, in which a fixed percentage of depreciation is charged on reducing value of the asset every year. While calculating depreciation in the diminishing balance method, the salvage value of the asset is not taken into consideration. The amount of depreciation decreases every year under this method. Annuity method. The annuity method considers that the business, besides losing the original cost of the asset in terms of depreciation, and also loses interest on the amount used for buying the asset. This is based on the assumption that the amount invested in the asset would have earned in the case the same amount would have been invested in some other form of investment. The next is the depreciation fund or sinking fund method. Under this method, funds are made available for the replacement of asset at the end of its useful life. The depreciation remains the same year after year and is changed to profit and loss account every year through the creation of depreciation fund. Insurance policy method. According to this method, an insurance policy is taken for the amount of the asset to be replaced. The amount of the policy is such that it is sufficient to replace the asset when it is worn out. Um, the next one is revaluation method. Under this method, the asset is like a loose tools or revalued at the end of the accounting period, and the same is compared with the value of the asset at the beginning of the year. Depletion method. Depletion means exhaustion of natural resources. Example: oil wells, mineral deposits, and timber, etc. Uh, in this, depreciation is calculated per unit of the output by dividing the total acquisition cost of asset by the number of units expected to be produced. This is similar to production unit method, machine hour method. Under this method, depreciation per machine hour is calculated. The cost of machinery after deducting the residual value, if any, is divided by